All right, let's talk about the U.S. mortgage market, because the latest numbers are telling a fascinating story. It's about a lot more than just interest rates. It's about a market that's kind of holding its breath. So let's break down what's really going on behind the scenes.
It all kicks off with this one little number, negative 0.8%. That's the drop in mortgage applications in just a single week, according to the Mortgage Bankers Association. Yeah, I know, less than 1%. It doesn't exactly sound earth-shattering, right? But believe me, it is.
Because that tiny number, it's actually a massive signal. It's a perfect snapshot of a market that's stuck between these stubbornly high interest rates and a whole lot of economic anxiety. So today, we're going to unpack the huge story hiding behind that single digit.
Okay, first up, the big picture. The main theme here is that the mortgage market is, without a doubt, cooling off. That energy and heat we saw in previous months, it's starting to fade, and the data shows us exactly why. So what's causing this cool down? Well, the story really boils down to two key factors on pretty much everyone's mind right now: interest rates and economic uncertainty. And hey, you don't have to take my word for it. Joel Can, an economist with the Mortgage Bankers Association, just lays it out perfectly. These two forces, those high rates and all the economic jitters, are the reason so many potential homebuyers are just hitting the brakes.
And here's where it gets kind of interesting. If you look at the numbers, rates actually dipped a little bit this week. The average 30-year fixed, for example, dropped to 6.51%. But here's the crucial point. That is still way higher than what we've all gotten used to. And it's that sustained high level that's really freezing a lot of people out of the market.
So how does this play out for people who already own a home? Well, when it comes to the refinancing market, the impact has been, well, pretty dramatic. It's basically hit a brick wall.
And you can see the split really clearly right here. While applications to actually buy a home ticked up 1% for the week, look at refinancing. It dropped by a full 3%. You've got these two very different stories playing out at the same time.
And we're not just talking about a small dip here. The pace for refinancing is the slowest it's been since December of 2022. Think about that for a second. With rates where they are, the financial reason for most homeowners to get a new loan has just, well, it's pretty much evaporated.
Now, let's go back to that purchase market. That 1% weekly gain sounds nice, but it's hiding a much bigger story. Because if you zoom out and compare it to the same week last year, purchase applications are actually down 7%. And that's the first annual decline we've seen since January. So it tells us that even the purchase market is really feeling the pressure now.
Okay, I know, so far this all sounds a little gloomy. But if you dig into the data, you start to see some really fascinating pockets of activity, some silver linings, especially for certain types of buyers. So what's driving this? Well, just look at this chart. The average rate for a conventional loan, right, it's at 6.51%. But an FHA loan, that's sitting down at 6.22%. Now that difference, about 30 basis points, which is just a fancy way of saying 0.3%, might not sound like a lot, but for a buyer trying to make the numbers work, it is a huge deal. And what's the result of that rate difference? Boom. A 5% jump in applications for FHA purchase loans in just 1 week. That tells you that buyers are actively hunting for these advantages to get a deal done in this environment. So the big takeaway here is that while the whole market is slowing down, it is absolutely not dead. We're seeing these pockets of activity where savvy buyers are finding a way in. You've got FHA purchase applications surging, all because that FHA rate's a bit cheaper. And we're also seeing more people turn to adjustable rate mortgages, ARMs, to get a lower payment up front. This all brings us to the final and most crucial question. Where is the market headed from here? And to figure that out, we can actually look at a very interesting forward-looking indicator. It's called the Exactus Mortgage Intent Index. Sounds complicated, but the idea is actually super simple. It just tracks when people get their credit pulled for a mortgage, which is one of the very first steps in the home buying process. This gives us an early signal of what future demand might look like. So what is that early signal telling us right now? Well, this past week, the index fell by 3.35%. This suggests that the softening, this cooling trend we're seeing in the market, it's probably going to continue, at least in the short term. And this is a huge but. Here's the key insight from Thomas Lloyd over at Exactus. He says that despite this pullback, the underlying desire to buy a home is still there. People aren't giving up, they're just paused. They're waiting on the sidelines for a better opportunity, for lower rates, and a bit more stability. And that leaves us with the most important question of all, doesn't it? The market isn't stopped, it's just on pause, with all of this pent-up demand building in the background. So the real unknown,
The one that's going to define the next chapter for housing is what happens when someone finally presses play.